Getting set for the countdown, I'm quickly looking at some of these AMC stocks. So they're in the pre-open, they're all responding to that relief rally because the base expense ratios, which have been tweaked, there also the reduction is not as onerous as what was being proposed in October. The broad cut is about, for funds which are more than 2,000 crores in AUM, the broad cut is about 10 basis points. Earlier, SEBI was proposing a 15 basis points cut in the expense ratio, so it's better than expected. And even for brokers, it's a sigh of relief. The brokerage fee cap is at least not as low as 2 basis points, which was the earlier proposal. Here we go. So let's see how it's playing out. 1 point down on the Nifty, now 10 points, 30 points, 34 points lower. It is a lower start. It's becoming quite clear, but it's not sort of a washout by any stretch. Tata Motors about 1%. Eternal is slightly lower. The Bank Nifty is absolutely flat. The mid-cap index is totally flat. Actually, before we talk about other stocks, let's just look at some of these names. HDFC, AMC, Nippon Life India, Aditya Birla Sun Life. All the AMC stocks are up between 2, 3, 4, 5% because, as I just explained, the unbundling of the total expense ratio is something which was on expected lines, and the reduction in the base expense ratio is not as big as what SEBI was proposing in October. So that's a relief. Quick check on the broker stocks. Let's see what Novama and Motilal Oswal, etc. are doing, IIFL. All these stocks are also flat because the brokerage fee cap is about 6 basis points now. So that's how we begin. But yeah, guys, 50 lower on the Nifty for now.
Well, that's right. A few stocks, though, actually from the broader markets are reacting. I think we had some positive news flow on Antony Waste, so that one, in fact, has opened up with a sharp uptick in today's trading session. Let's get that one up for you on the screen. They've got a 1,330 crore municipal solid waste contract from the BMC, so explains why that stock is doing well. IOC, I think, is seeing a bit of a gash, so let's pull that stock as well up for our viewers on the screen. IOC is a little bit lower. We'll just keep an eye out on that name. What else is moving around? EPAC Durable, well, that's seen some profit taking. Remember, for the week, it's up more than 15%. Meesho is flying away as we speak. Equus is up close to 2.5% and volumes are quite large. Grow, that's higher today. Volumes quite large on that particular one as well. So big uptick is what we're seeing. Tata Motors PV is under pressure. We have a Patel Engineering as well, a little bit lower. But I think we should get Ola Electric as well because the founder out there, Bhavesh Agarwal, he's gone ahead and sold another 4 crore shares odd. We're waiting by. Hopefully, Bhavesh joins us here on CNBC-TV18 to clarify what's the intent. Is he done? Is there more to sell? And what's the outlook with regard to the business? GMR Power, the board has approved a fundraise worth around 1,200 crores via the preferential share issue and warrants. So I think we should get GMR Power as well up for you on the screen. HCL Tech, well, they've signed a multi-year contract with a bank. I think, I'm not sure whether or not, the stock is up close to around 0.5%. KPI Green, some positive news flow. That stock as well, up and about in today's trading session. Large volumes on that one.
Well, Tata Motors CV is having a good start to trade. That's up close to about 2%. The stock is approaching 400 rupees. Today, BofA and JP Morgan have initiated coverage with a bullish call, and their target price is at 475, which means more than a 20% upside from current levels. But outside of Tata Motors CV, sectorally, it's autos which is the biggest drag today, with a fall of close to about 1%, 0.9% lower on the Nifty Auto Index. So Tata Motors passenger vehicles, Bajaj Auto, M&M, all down in excess of 1%. Eicher Motors, Maruti also reeling with some minor cuts. So sectorally, autos is subdued, the top loser, but Tata Motors CV is doing well. HDFC Bank has been a bit of an underperformer. Now, it's open lower, but this week, HDFC Bank has a cut of close to about, I think, 2%, which has underperformed the Nifty, which is down 1%. So HDFC Bank has been a bit of a drag, and Shriram Finance continues to see buying. Yesterday, stock paired some of the gains, but that board meeting is tomorrow where they will consider a fundraise. And Shriram Finance ahead of that is up nearly 0.5%. And IT is having a good day. Maybe we should get the rupee rate. Yesterday, after crossing the 91 mark against the dollar, making a new record, towards the end, there was a sharp rebound. And I think the Nifty rupee closed at 90.38. Well, it's advanced another 4 paise. So it's 90.34 against the dollar rupee. So steady compared to yesterday's level. So IT is having a good day. Infi, Wipro, HCL Tech all up 0.5 to 1%. Tech Mahindra also on the buying list. Signed, we should get that up. But the fact that I think India it doesn't have that AI trade is working in our advantage today. Just pull up the Asian market picture. You've got a cut of, I think, more than 2% coming through on the Korean market. Kospi is down 2%. Nikkei is down 1.25%. Hang Seng, the Chinese markets, Taiwanese markets, all lower. So they're falling in sympathy with the cuts seen in NASDAQ, what happened with Oracle. But India today is, insulated in that sense. So it's a flattish, sluggish open, but no deep cuts visible right now.
Yeah. And
Just one correction on IOC. It's gone ex-dividend. So that's why the stock is down. Adjusted for that, actually, the stock will be more or less flattish.
Oh, okay. So that's where we are, right close to the lower end of that trading range. Remember, in the last, 2 odd weeks, the market has traded exactly in this band, 25,700 on the lower side and 26,100 on the upper side. Where does the market go from here? Well, let's put that question to Anish Tawakle, co-CIO equity at ICICI Prudential AMC. Anish, thank you so much for joining in. Your business is actually the most interesting one, right? So much is going on. Of course, you folks yourself are coming to the public markets and investors are eagerly awaiting it. Phenomenal response to the anchor book as well and the overall issue. But really, capital market as a play, now, as we saw yesterday as well, regulation is forever changing. But it is, the financialization story is also very, very real. So within this entire space of financialization, beyond the banks and the non-banks, beyond the lenders, how are you looking at the rest of the financial services space? And there's a lot of interest as well, investor interest. We've seen what's happened with a lot of these tier 2 banks and foreign investors wanting to come in. So let's start right there. Your view on investing in Indian financial services in 2026.
Yeah, Surbhi, thanks for having me. So the way I see it, look, while there is a long-term story of capital markets growth, one also has to be conscious that we are probably at a cyclical high, right? And one should be careful when invest, even if there is a structural story, while we're at a cyclical high, you need to be slightly careful. We like banks, particularly the larger banks. So on the banking side, the way I see it, banking is an industry that's driven by scale. So, and you can see in any country in the world, there are not more than 4 or 5 national banks. So when playing banks, I prefer larger scale banks. I'm not of the view that capital will help solve some of the problems of the smaller banks, because capital has never been the problem. The problem has been distribution and customer franchise. So in banks, I would stick with the larger banks. In the capital market side, one has to be conscious of cyclicality also. And as we've been seeing, some of the smaller cap stocks have not been doing well. And that will create some pressures in the brokerage side of the business, which I think is very, very transaction driven. Because transactional activity is probably at the peaks, at a cyclical peak.
Okay. Anisha, hi, morning. You want to comment on AMCs? I know you're a part of one and yours is coming to the market, but as an industry on AMCs, because the big risk, even when your IPO was open, was more on the TER front. I know the impact is softened. It's a lot less compared to what was feared in October, but as an industry on AMC, what is your view now?
So given that we are in an IPO, there are constraints on what I can say. What I would highlight, though, is that regulation, particularly when it reduces expenses, has over the longer term helped grow the industry, because the product becomes better for the consumer, and that always helps the industry growth. Both transparency and cost reduction have always helped the industry. I think the one other point I'd make is I think AMCs are less cyclical than brokers because the asset base is steady. And the AMC industry is less capital intensive than, say, other parts of the financial services industry like banks or insurance. So what ends up happening is that the AMC industry is able to pay out a higher proportion of its earnings than some of the other capital intensive parts of the business.
Speaking of capital, Anish, and you said capital is not the real issue for banks. I want to ask you that same question about insurance. Whether capital is the real issue for insurance or not. In fact, I wrote a piece on this. We'll probably put it up today. So, yes, there's 100% FDI now. But does that move the needle, really? Is that the real issue? Behind 1% penetration of health insurance in this country and 2.8% penetration of life insurance in this country, at a time when the mutual fund industry seems to have done a lot better. What's your take on the bill and overall insurance as a space to invest in?
Oh, we like insurance, but I like life insurance more than than general and health insurance. I think the way I see it, life insurance, particularly if you look at LIC, which has been the historical player, actually has been has actually done a reasonably good job of reaching out to various segments of customers. Now, the problem with health insurance, particularly in my view, is that health insurance is less about delivering healthcare than about managing fraud. And that is always very challenging, right? You have to manage fraud from the hospitals, fraud from the patients, fraud from the doctors. So health insurance is actually very, very difficult industry to manage. And I'm not sure we've had models that have demonstrated sustainable performance in that industry yet. So I'm not confident of how the health insurance industry will play out. Life continues to do well, but I don't think the issue is capital there. There's actually cross businesses, right? Given the state of the capital markets, capital has not been a problem for anybody with a good business.
Anish, to move to a very different subject, and this is not really about a particular stock or a particular IPO, but I wanted to get your sense on what's happening in the market. And I'm only taking Meesho as an example. I mean, an issue comes in at 100 rupees and the stock doubles in 7 trading sessions. So is what we are seeing, I mean, did the iBankers get it wrong? Or has the market become very, very short-sighted in terms of the whole price discovery mechanism and then discounting the future? What is really going on with some of these new IPOs? And they do have a layer of tech. And since we don't have deep tech or AI, I don't know if that's what's causing the excitement. But as someone who's managing a large sum of money, how do you look at some of these consumer tech issues and what's happening to the price?
So look, when I manage funds, my criteria is I want to have a demonstrated track record of profitability before investing. And that has helped me. And while IPOs do very well in the initial spurt many times, you can also see, if you look at the 5-year performance of IPOs, that's not so great. Because when an IPO is coming, one has to remember it's the promoter is effectively diluting, he's effectively selling. And therefore, you have to be careful about, how, and at that time, obviously, performance is probably at a very peak level. So you need to be careful about how you extrapolate that. And I think that has worked well for me. Look, in general, in the markets, I would say, when you're seeing a lot of promoter selling, a lot of private equity selling, you have to be careful. And that is what has been happening in the small and mid-cap space, right? And if you look at that overall space, it's kind of weakening. Because, I distinguish, I say there are 3 types of companies. There are hardware companies, there are software companies, and vaporware companies. Vaporware companies being ones where the narrative is way in excess of the reality. And I think those narratives are being exposed. And I expect that to continue. So small and mid caps, I would still be careful. Large caps, I think, are offering a reasonable risk-return trade-off over a 3-year view.
Anish, what else do you like going into 2026? What are the big themes that will dominate investment?
So our view is that the economy will regain momentum, right? So we think we are positive on the economic outlook. And as a consequence, we like basically sectors that do well when the domestic economy does well. So that's stuff like financials, it's stuff like industrial and capital goods, automobiles, and also cement. In financials, the one area where we are concerned is the unsecured consumer lending space, which we would avoid even at this stage.
Okay. All right. Anish, final question before we let you go. What about the EMS space? That's a space that has a long runway. India is growing at more than 30%, the EMS industry. China, obviously much larger than us. That's growing at around 10%, while the globe is growing at around 5%. Any view on this EMS theme? Because the space appears, it has a long runway, but valuations got a little too frothy. Your take post the recent correction?
Look, I have avoided EMS companies. I'm not sure of the competitive advantage these guys have built. I think the market is making a mistake by giving a multiple to PLI earnings. PLI earnings are reported as part of normal profits, and the market is giving a multiple on that. That is not correct because those are non-recurring earnings. So if you exclude, the way you should look at PLI earnings is exclude the EMS spaces. You should exclude the PLI income from the profits and value it. And you know what absurdity has been happening as a consequence of this? A company gets a PLI of 1,000 crores. Its market cap goes up by 10,000, 15,000 crores. Now, what does this mean, right? It means that there was an opportunity for a company or a business to write off 1,000 crores and create 10,000 crores of value. You didn't need the government's money to write it off, right? Your investors could have done it in any way. So when I see that happening, right, when I see a company getting 1,000 crore PLI and its market cap going up by 15,000 crores, I say, look, what are we saying about ourselves in the financial markets? That here was this great opportunity, which we, as with all the leading mutual funds, venture capitalists, private equity investors sitting here, were not willing to fund. But now that the government has funded it by 1,000 crores, we are willing to back it. So I find this whole EMS, which is backed by PLI valuation, completely I can't understand.
That's an interesting point you make over there, and one that we will definitely keep in mind. Anish, finally, just coming back to that whole issue of tech and the lack of deep tech and AI themes here in India, which also kind of circles me back to a lot of these consumer companies which have a layer of technology built into their operations. Now, it could be it could be an e-commerce player, it could be a lens cart. But the fact is that, they all project a layer of smart technology. Now, in 2026, how should investors think of technology, both in the traditional sense? IT services, TCS just yesterday kind of gave us some glimpse of what the AI revenue is looking like for the company. So how should one look at IT services? Would you like anything there? And how would you look at new age, so-called new age technology in the marketplace?
So, our sector views are best reflected in our business cycle fund. And if you look at the published portfolio, we are running IT 0 in that. But I'll distinguish between the sort of mature software services businesses and the new age tech businesses. See, I'm avoiding the mature software services business because my view is that the US economy will probably cyclically weaken from here. Right? I think US economy has been cyclically very strong, and I expect that to weaken. So I'm avoiding the IT services space. On the new age tech, look, the way I see it, I'm not sure of what the real market size is, right? Because when you're operating with losses, obviously you can sell a lot. I always say that, if you go to, in a gurudwara, the langar is always full. You're giving away food free. It will always be full. When you try to convert it into a restaurant, that you cannot expect the same market size. So I am careful of companies that are, losing money and growing, because the true market size may actually turn out to be smaller when they actually aim to make a profit. So I'm quite careful in this new age tech. I think the problem scale might not solve the problem. In fact, you might find that the companies have to shrink to improve profitability rather than scale up to improve profitability.
Okay, all right, Anish, appreciate you joining in and giving us that view. I'm not sure whether we'll talk for the remainder of this year, but all the best towards the end of the year and see you in 2026 on Personal Note.
Thanks.
Thank you. Well, let's move on to the EMS space then. Kaynes Technology, that's a stock in focus. Remember, it's down more than 40% in 2025 so far. The company, though, has signed deal strategic partnerships with AOI Electronics as well as Mitsui. Now, the deal aims to strengthen its upcoming semiconductor manufacturing operations in India. To discuss this, smart metering business as well, and what's the outlook, we're joined by Mr. Jairam Sampath, the CFO at Kaynes. Hi, Mr. Sampath. Good morning, and thanks a lot for joining in. Just a quick question. Yesterday, I read a couple of sales notes that mentioned that the two partnerships, AOI Electronics as well as Mitsui, Japan, both of them, were announced actually earlier as well, September 2024. So what's new in this announcement?
This is final conclusion of the sign-off with the partnerships. And as you know, AOI finally has deployed resources to collaborate with us in the OSAT space. So they are supposed to give us technology and also training, etc., the area of advanced packaging. This is part of our earlier foray into semiconductors, and where we had secured earlier clients in the what we call the legacy technologies, which is the wire bonding and all that. And then, of course, our main aim at the end of the project is to also have significant presence in the advanced packaging, which adds, of course, the technological leadership, plus also it adds profitability to the entire enterprise. So it's part of very much part of the earlier plan. AOI is one of the collaborators that we had mentioned in our DPR also to the Indian Semiconductor Mission. And this has been concluded yesterday in terms of sign-off.
Got it.
Otherwise, we've been having a lot of discussions and also a lot of exchanges, etc. in the past. As far as the Mitsui is concerned, Mitsui is one of those conglomerates which spans both. They've got two parts. One is, of course, the entire supply side. They can help us strategically in terms of chemicals and all other raw materials, which is crucial for semiconductors. Plus, they also have an arm to introduce us to other clients within Japan. And so, as a partner, Mitsui will bring in a lot of value in addition to bringing technological raw materials and all that. It'll also give us some good market access within Japan.
Okay. All right. Just to touch upon the OSAT facility, could you tell us what is the current status? Is it going according to plans?
Yes.
What is the capex you're lined up, as well as the revenue potential? How much of it basically is getting tied up?
Yeah. So as far as capacity tie-up is concerned, already we have 3 large clients. And if we so desire, we can probably tie up the entire capacity, because these are very large clients like Alpha Omega Semiconductor, there's Infineon, there's also the L&T, which has acquired a business of Fujitsu General. So, of course, we would like to be more cautious about our portfolio, and we are also adding some more advanced packaging. So, from the point of view of customer traction, I think this is as best as it can get at this point in time. We've completed our what is called the pilot plant, and it is shipped out the first set of semiconductor assembled in India, and it is under evaluation. We should hear from the customer anytime for approvals. And then, of course, we'll take up the other 2 customers' clients too, wherein we have got specific RFQs for different types of semiconductor assemblies. And maybe by the next fiscal, we probably would tie up at least 25-30% of the total, let's say, capacity for this in terms of revenues for the entire semiconductor project as it stands today.
Mr. Sampath, there's been just moving on to the smart metering business, because there has been a lot of scrutiny regarding the disclosure inconsistency, governance, working capital, stress, etc. Now, you have guided to bring down the contribution of the smart meter business revenue. I believe it was about 30% to your overall revenues in H1.
Yeah. So we have not said we will bring down the contribution. It's just that it will be a run rate business, which will hover between 800 to 1,000 crores a year. And as the other segments grow up, the relative composition of smart metering business will come down in the overall, let's say, revenue profile. Okay. This year, about 4,000 plus crores of revenues are expected. So smart meter is going to remain sub 1,000. So it will come down to about 25% for the year. The way to look at our business is it's an order-based business. And so as we disclosed last September, we had an order book of about 8,100 crores. And a smaller portion of that is smart meters, approximately about 1,300 odd crores is smart meters. Remaining are businesses which are already there in the 6 verticals that we serve. So the reality is that in every year, a different business becomes a little larger than when we onboard the new clients, etc. It becomes a little larger than its eventual size. And then when other businesses come in, then it kind of settles into a proper composition.
Mr. Sampath, of course, you and the rest of the management team did go to great lengths in that whole episode to explain. I think detailed investor calls were also held where you clarified some of these points. My question is basically, the stock is down 50% from the peak. Right now, are you thinking of any other ways of, rewarding shareholders, or maybe shoring up a little bit of confidence? I don't know, a special dividend of any sort. I'm not sure if promoters are thinking of maybe buying a bit of stake back from the market. Anything on the cards?
Yeah, of course, in the coming year, of course, I still need the board approval, recommendation, etc. But this is not outside the consideration set. Basically, maybe the next coming board meeting at the end of the year, we may recommend going down the path of starting a small amount of dividends. And see, confidence building measure, the ultimate confidence building measure would be to perform as per expectations and promises, which is what we are preparing to do. And we are quite clear that all the strategic initiatives and all the tactical moves that we have taken is bearing fruit, and it's pretty much on schedule. So sometimes it does happen that markets get spooked because of various reasons. The trigger is something else, and something else takes the momentum.
Yeah.
But from our perspective, I think we are well poised to kind of deliver on the numbers that we had promised. And also the strategic actions are in place, because we're not only talking about this year, we are talking about FY28, $1 billion, and then thereafter quickly reaching to a 2 billion number.
Right.
So all of those actions are being taken now. Yes, there are some small
Mr. Sampath?
quarterly troubles that happen sometimes on working capital, sometimes on some cash flows.
Yeah, right. So Mr. Sampath, on the working capital, which is where the issue was, which is where Kotak raised that issue, can you tell us, as of today, when we're speaking, what are your net working capital days looking like? What is the plan of bringing it down? Just give us a roadmap.
Sure. So the analysts actually did not talk about these things. He talked about a lot of factual, let's say, quote unquote inconsistencies, which were later on proved that there was only one little error. Be as it may, we are looking at about 85 days and less by the end of the year in terms of net working capital. And we also are committed to show operating cash flows, significant operating cash flows, positive cash flows by the end of the year.
Okay.
And
Mr.
I think towards that, we are making good progress. So you will see probably when we meet again sometime during April or early May, these numbers would have been achieved.
Okay, positive cash flow by the end of the year. Just a quick word. You said FY26 revenues of 4,000 crore?
Yeah, plus.
4,000
There
crore.
are lots of moving parts here. We had earlier estimated some small revenues for semiconductor also. Now we are thinking that we'll get approvals for semiconductors so that next year's entire revenues are secured. And since our business completely depends on how well we perform, and there are no PLI and those kinds of things, except for the PC board, there is a PLI available, which we'll probably deal with it next year. Otherwise, our EMS and OSAT businesses are dependent on completely firing up the entire capacity and then let's say, delivering to all the customer requirements.
Yeah, got that. Thank you for explaining. The reason we asked is because after Q2, you said for this year, you will deliver a 60% revenue growth, which would have put your top line at 4,500 crore. And now you're saying it will be 4,000 crore plus.
4,000 is the EMS portion of the business. There are overseas subsidiaries and so on and so forth.
So 4,500 crore stays as a guidance.
Yeah. So we've been saying it will be around 4,2 kind of number. Let's see where it gets to.
Sure. All right. Thank you. Out of time. Thank you, Mr. Sampath, for joining in. Moving on now. Cyient is the next management. This is after the company's semiconductor arm bought a majority stake in Kinetic Tech for $93 million. To discuss more, we have with us Suman Narayan, CEO at Cyient Semiconductor. Thank you very much for joining in. So first, if you could tell us what is Cyient's Semiconductor's current revenue base, and post this acquisition, what will the number look like in terms of a top line and the margins of the acquired company?
Yeah, so Cyient, we're a wholly owned subsidiary of Cyient Limited, and we're acquiring 65% stake in over 65% stake in Kinetic Technology. So basically, with this acquisition, we will double our revenue. Our margins will be positive, and we will be accretive in year 2 from an EPS perspective.
So you double your revenue, you mean you will hit $100 million because you had guided for $50 million by end of FY27. So by FY27 end, it will now stand at $100 million?
Yeah, today, if you look at where Kinetic is about a $40 million business today. They will end this year, at least the current FCY, they will end the year around $40 to $41 million.
Correct. And no, for Cyient Semiconductor, by the end of FY27, the revenue number will be?
We don't forecast that far in the future, but yeah, we will be moving fast and growing really fast, and by FY27 with this acquisition and our internal ASIC business as well.
Okay, so you will double the semiconductor business by the end of FY27. We can take that. On margins, you had earlier guided for EBIT neutrality by FY27. What are the margins of Kinetic Tech?
Yeah, so the margins right now are in the mid 40s right now. And as it's a product-based business, it's very different from the traditional services business. So over time, we expect the margins to continue to improve, with basically improvement on the COGS side, on the cost side of the business.
Okay, so 40% is the margins of Kinetic Tech, and that will overall
45% is what they'll end up with.
Okay. You've also said that the acquisition will be EBIT accretive from year 1 and EPS accretive from year 2.
Yeah, year 2.
What are the key operating levers other than the margin expansion, other than the fact that the acquired company has higher margins?
Well, the operating levers for us it's primarily, the growth in the business. They're going to be driving, significant growth year on year for the business. So that will definitely help us as we move into next year.
All right. Hi, Suman. Morning, and congratulations on this acquisition. Quick question. Why 65%? Is there a roadmap ahead to go ahead and acquire the remaining of this?
Well, it's greater than 65% is what we said. Yes, over time, there is definitely potential in acquiring the full business.
At what valuations? Is there a predetermined, are there some benchmarks that have laid out?
What we're looking at right now, what we paid, I think you all know, I think the industry average is 5x. We are much lower than that right now at 2.9x is what we ended up paying for the business as well. We paid $93 million, as you know, for the business.
Okay, all right. It's a little more expensive than your previous acquisitions, but you're saying in comparison to industry standards, it's a relatively cheaper compared to... So you believe you've got a good deal at around 3 times. Got that. What about funding of this, if you could split it up for us?
Yeah, I think we will have a mix of cash and debt to fund the business.
What's the
You want to break that up for us?
I think, we have an exact breakout of the cash and fund, but, we're moving in that direction for the cash and the breakout of what we're funding it.
What's the cash in the books right now?
I'm not sure what the Science Semiconductor cash is on the books at this point.
You said one of the big operating levers will be the growth seen in Kinetic Technology. We know this year's top line is $41 million. What is the growth rate anticipated for Kinetic Tech?
I think we will be in, 20-25% is definitely possible in this business. As these guys are really focused around edge AI solutions on power conversion. So we see the growth significantly on the edge AI portion of the market for us.
Got that. These are helpful numbers. So Kinetic Tech is growing at 20-25% with margins of 45%, and this will double your overall semiconductor, business, and it will be funded with a mix of cash, and you're, exploring other avenues. What is the key rationale for making this acquisition? Is it capability? Is it the people? Is it geographical expansion? Is it clients?
See, they're really, if you look at it, what excites me about this comes down to 4 reasons. First is the acquisition doubles our addressable market now in power. Power is a large market in semiconductors. It's like a $40 billion market. Now it gets us access to about $8.5 billion of the TAM in power, especially in power conversion. Second is Kinetic brings about 250 ASSP products and 100 plus product patents. And now we can cross leverage that across both our ASSP strategy and our traditional business on custom ASICs. So we believe that the future revenue growth will continue to be nonlinear. And third is that, Kinetic has a strong customer relationship, especially, pretty deep. Many customers have been with them 10 plus years. It's reflecting just strong product conviction, higher switching costs, and the enduring value of their IP. And fourth, I'd say, obviously it's going to be financially accretive as we talked about, and it helps us double the revenue. And also the addressable market. In summary, it accelerates our power strategy by years and expands our market opportunity. It strengthens our IP moat and improves our financial profile, making it a critical step for us to build a high margin power business for India and for the world.
Okay. All right. Suman, we'll leave it on that note. Thank you very much for joining in, and good luck with that acquisition and the business for the rest of the year, and have a fantastic end to 2025 as well. Wish you season's greetings. Thanks for joining in.
Thank you for having me.
Well, we'll take a break on that note, come back on the other side. By the way, the market slipped a little more. Again, getting closer to the trading range. Now we're closer to 28,700 than where we were about less than an hour back. We'll take this up, and we will again put the spotlight on mutual funds and stockbrokers, as SEBI has overhauled the mutual fund regulations after 3 decades.
Co-presented by Bank of Maharashtra, Ek Parivar, Ek Bank. Co-powered by National Stock Exchange, Soch Kar, Samajh Kar, Invest Kar. And Century Ply Club Prime, Raho Befikar.
We have carefully reviewed your performance and promoting you to branch manager.
Sir. Hello, Motilal Oswal.
When life goes to the next level, download Rise by Motilal Oswal. Investments and securities market are subject to market risks. Read all the related documents carefully before investing.
Hey, why are so many lights on? Is it Navroz?
Settling accounts, uncle?
No, writing a love letter. Check your accounts every day and ensure there is no mismatch. Exchange sends trade-related messages daily. Do timely verification. And if there is a mismatch, inform the exchange immediately.
Soch kar, samajh kar, invest kar.
This is Network 18, and you're watching CNBC-TV18.
Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, the banker to every Indian, truly. And Bank of Baroda se loan lena ek master stroke hai. In association with Servo Hypersport F5, when speed is your default.
Welcome back. So mutual fund stocks are up and about this morning. You would wonder why. This is at a time when the regulator has overhauled the mutual fund regulations. It has decided to unbundle the total expense ratio. As we've been telling you right from the morning, now that total expense ratio will have a base expense ratio. It'll have the statutory fees and taxes, and then it'll have the brokerage fee. And all of this has to be transparently shared with the end investor. So what does this mean for the mutual fund industry? What does it mean for brokers? Because the brokerage cap has been lowered. It's not been lowered as much as what SEBI was proposing, but it's still come down to 6 basis points. So what does it mean for market participants and for investors? Well, to take this forward, we have with us Amisha Vora, Chairperson and Managing Director at PL Capital, and Mr. DP Singh, Deputy Managing Director and Joint CEO at SBI Mutual Fund. Thank you very much for joining in, Amisha and Mr. Singh. Let me start with you, DP sir. So all mutual fund stocks are excited because, and I checked the fine print as well, in October, they were going to reduce this base expense ratio by as much as 15 basis points, which would have been, hurting a lot of the big funds. But finally, they've reduced it by only 10 basis points. What is your take on the regulations announced yesterday?
No, I think they've started with 15 basis point, and this after the second and third grade, they have made it 10 basis point. That is generally so when we all discussed, and when we said that the levies are not 15 basis point, but 9 to 10 basis point. And I'll give all the credit to the regulator to understand the math, and they did it the way it should have been, and that's a very good thing. We are thankful to the regulator for that.
But Mr. Singh, this 5 basis points that was being levied in lieu of exit loads, that also goes away. So won't profitability, overall mutual fund profitability, won't it be impacted?
It will be impacted, but I think the volumes will make up for this. This will be impacted. 5 basis point on 40 lakh crore market is almost 2,000 crore. I mean, it's a big amount. But thing is overall dispersed among the various fund houses. But I think the market moving up and the volumes will make up for that. That's a minor thing. But why you are saying these stocks are up? Because there was a fear that it will be much more bad, but a lot of transparency has been brought in, and I think the impact is minimal. Impact is not very high.
Okay, all right. So you don't expect too much of an impact on profitability. Saying maybe volumes will make up for the few basis points that have been shaved off. Got that point. Now let's dive into that contentious broking fee debate, right? Amisha, let me come to you. See, earlier, up until now, if Mr. Singh was, paying brokerage fee or basically fee for research, it could be excluding the statutory levies and taxes. It could have been 8.59 basis points. Now it can only be as much as 6 basis points. How big a hit is this for brokers?
See, I'm so happy that Mr. Singh is here on this dais. And I would request the largest mutual fund and then all the other mutual funds that when SEBI has approved at least 6 basis points, they should pay 6 basis points.
So what were they paying overall, Amisha? In principle, what was the brokerage fee that was being given? Earlier, the headline cap was 12 basis points, including taxes. But what was the industry practice? You tell us, the inside numbers.
So sir is also here. And some of these large mutual funds, I guess, were paying between 4 and 5 bips. But the rest of the people used to still pay 9 bips, 10 bips. So if everybody pays 6 bips, then I think the institutional broking industry will not be very badly impacted. And one of the reasons SEBI considered this, and I believe, and took it out from base expense ratio and kept brokerage, is also because they understand the need for extra coverage that the broking industry need to put up as so many new IPOs are coming. If you see the number of not only large cap increasing, but mid and small cap increasing, and how really coverage brings volumes for these stocks, I think that there are many aspects even the mutual fund industry should consider. And we are the takers as of now in the markets. But if they stick to this 6 basis points because it is outside BER, then I think industry will not be at such a big loss.
But that's going to be a tall ask, Amisha, no? Because if the large fund houses were anyway paying 4-5 basis points, I don't see how they'll increase that to 6. And their argument, I'm sure Mr. Singh's argument is going to be on volumes. Because he's giving a lot of business to any broker. So therefore, lower fee.
No, my point is, how does it save for them? Because it is outside of BER. So even if they save on this 1 bips or 2 bips, how is it going to increase their profitability? If maybe my knowledge is not complete, but this is my question.
Mr. Singh, on to you. Let's hear from you on this whole brokerage fee issue.
No, Amisha, I appreciate your point of view, but we understand that the way our economy is going, the way our industry is going, we all are working for the unit holders. Neither for ourselves, nor for the brokers, nor for the distributors. We are here for the unit holders. So we have to create value for unit holders, and we have to stay afoot. And we all are not charitable organizations. We have to make money also. But I think the point well taken. And I think the whole both on the mutual fund side and both on the brokerage side, the impact is there. But impact is, yes, we welcome the thought process of the regulator, and the unit holders have to actually take benefit out of it, the whole process, and they stand benefited. And I think with the more volume, the more we are at a sweet spot, more and more volumes will come, and we all will stay afloat. We are not going to down. That's pretty cool.
But sir, DP sir, the issue here is what is the direction that the regulator is taking? Now brokerage has been brought down from 8.5 basis points to let's say 6. Now we don't know what it is going to be tomorrow. So directionally, will the larger mutual fund houses start thinking of setting up bigger, say, in-house research teams? Is that the direction that we are going in? Because at the end of the day, I mean, good research is the lifeblood of active fund management, whether you do it in-house or whether you get it done through a broker. So which direction are we heading in?
So it's very, very essential. The research team in any case is the essential part of it. It's not that we are outsourcing everything. We have a very strong research team, will further strengthen it. But talking about the regulator, the thought process is very clear. They wanted to bring in more transparency. They wanted to bring in that everybody should know levies are not static, whereas the expense ratios are static. So today the GST is one percentage, tomorrow it could be different. So it has to remain outside, both on the brokerage side as well as on this side. It's a very right thought process. So we know what we are charging base rate and what are the brokerage rates. I think that this will make up over the period of time. And as I said, I'm repeating, the way markets are, the way our economy is, the way capital markets are growing, I think will always stay afloat and with the profitable numbers.
Wonderful to have that optimism. Amisha, let me get the last word in from you. For the broking industry, this has been a year filled with twists and turns, right? And we still haven't heard the last on the whole options and what is happening, one product per week or two or one per fortnight. So on the F&O side, I think we're still all holding our breath in terms of what is the finality. And then obviously you have this lower brokerage fee from mutual funds. Now it's a reality. So for the broking business, what will 2026 bring in store? And I mean, as someone running the business, what will you have to do to ensure that profitability remains on track?
So, of course, each individual broking house will make their own strategies to gain market share, because when the yields come down, market share gain is one strategy which everybody will try to work on. But I feel that the need to cover more stocks, the need to cover more IPOs is not going to reduce. And it will take about a year or two for the broking industry to, particularly if I say institutional broking industry, to adjust to this brokerage rates and still continue to invest in the business, because the investments in terms of compliance, technology, and more coverage is increasing by the day. So definitely it will have some impact, and it will take little time before we really neutralize this impact.
Okay, all right. Thank you very much for sharing those candid views. Both Mr. Singh and Amisha, thank you for joining in. And in case we don't speak till the end of the year, wish both of you a very, very happy 2026. Thank you for being with us this morning.
Thank you so much.
Thank you, Sarbi. Thanks a lot.
Okay, all right. We'll take a break on that note. Come back on the other side. We'll have Manisha Gupta join in with the latest from the commodity markets.
Fly Emirates, fly better.
सपना था कि खुद का ट्रांसपोर्ट बिजनेस हो, पर फंडिंग मिलना इतना आसान नहीं था।
मशीनें तो खरीद ली थी, पर बड़ा ऑर्डर लेने के लिए पूंजी की जरूरत थी। घर से ही केक बनाने का काम शुरू किया था मैंने।
किसी के यहाँ टेबल कुर्सी बनाते बनाते मुझे ये हौसला मिला कि मुझे खुद का काम शुरू करना चाहिए।
फिर इनका साथ मिला और नए रास्ते खुल गए।
फिर इनका साथ मिला और मेरा बिजनेस इतना बड़ा हो गया। फिर इनका साथ मिला और फैक्ट्री यहाँ तक पहुँच गई।
फिर इनका साथ मिला और मैं इस मुकाम पर पहुँच गया।
सुन रहे हैं ना? ये सब एक ही नाम की बात कर रहे हैं और वो नाम है PNB। आपका सपना सिर्फ आपका नहीं होता है, वो पूरे देश की तरक्की का हिस्सा होता है। इसीलिए PNB लेकर आया है MSME लोन स्कीम्स, जो छोटे छोटे बिजनेसेस को आगे बढ़ाने के लिए बनाई गई है। इजी डॉक्यूमेंटेशन और अट्रैक्टिव रेट ऑफ इंटरेस्ट पे लोन आपको देता है PNB, वो भी बिना किसी झंझट। झट से PNB का भरोसा, अब हर व्यापार होगा बड़ा।
कौन है जो जोड़े देश को? विकसित भारत का विकसित वायर.
We are everyone, but we are not just anyone. We choose progress over pressure. We say no to shortcuts and yes to the strength of discipline, to the pride of planning, to the thrill of watching our future take shape little by little. We are citizens, and you can be one too. Sip karo, citizen bano. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Thank you.
Enjoy your meal.
Neither the middle seat nor the meal is a sandwich. That's Air India now.
High MTF rates hurting your profits? Why, what's your MTF interest rate?
Mine is 14.5%. It's cutting down my returns.
Then switch to Paytm Money. Their MTF interest rate is just 7.99% per annum. Pay less and trade more. Switch to Paytm Money.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.
All right, shifting focus now to the commodity markets. Manisha is now joining in and putting the spotlight on the precious metals.
Well, I am, because I can't get enough of that. The kind of run-up that we've seen in all of these precious metals in 2025, it clearly can be called the year of precious metals. Not only have they outperformed various other asset classes, including equities and bonds and real estate in some matter as well, but it also has been the best year in many, many years for many of these. So take a look at the gold prices. We're up by 65% in this year. Outperformance coming in from silver at 130%. So that clearly has outperformed not just the precious metals, but overall all commodities as well. Take a look at platinum, 120% of gains onto that one as well. It's a pity that you can't really invest in platinum as an underlying commodity in the Indian markets there. Same goes for palladium, 93% of gains coming in for this one. So this is where the sparkle clearly is. So when you look at this year, you have record highs coming in from gold and silver. It's an 18-year highs in where we are trading when it comes to platinum, and it's a 34-month highs for palladium as well. So we seem to be making record of sorts when it comes to all of these precious metals there. And I want to break it down for each one of them now. So when you look at the gold prices, well, it is headed for the best annual gain since 1979. But this year is different because there's just so much that has been happening in 2025 that from the starting or the beginning of this year, you saw a lot of interest coming in. The central banks have been buyers for the last 3 years, and 2025 continues to be a fourth year where you could be looking at 800 to 1,000 tons of buying coming in from central banks. And then there has been support from geopolitics, tariffs, growing global debt. All of that has led to safe haven buying come in for gold, including the US rate cuts as well, with an expectation that that cycle perhaps would continue in the next year. Currency debasement has been yet another factor. The markets are talking about QE yet again. So the gold support perhaps would just continue to be. The markets also have seen silver headed for a best annual gain since 1979. So everything that gold has had, silver also has had in sense of supportive fundamentals. In addition to that, you have supply deficit to continue in the sixth year in 2026. It also is about very strong industrial demand and a record investment demand that we saw in this year for silver. India perhaps could end up importing 7,000 tons of silver this year, majorly purely on back of strong investment demand there. Take a look at platinum and this is where investors move to as in sense of alternate assets. In the international markets, platinum buying has been very, very on the stronger side. There also have been supply concerns that we have seen come in from South Africa, and 2025, by the way, is a third year of deficit when it comes to platinum. There also is a report from World Platinum Investment Council which says that for the year 2025, we are looking at a supply deficit of 69,000 ounces. They do believe that you could be looking at a marginal surplus in the next year, but with the way the geopolitics, etc. are, you could be looking at further support for this too. Palladium is the last on my list, and we've seen stronger gains onto that one too. There is potential disruptions that we've seen from Russia and South Africa absolutely supporting markets there. So apart from investment demand, it also is about automotive industry demand that has supported palladium, industrial applications, global economic conditions, all of that has been quite supportive. And before we call curtains for 2025, it still is about Bank of Japan, Bank of England and ECB monetary policy meetings. All of that in this week, that would tell you on where we actually end this year for all of these precious metals.
Thank you very much for that. Get into a break. On the other side, it's our special segment. It's the economy. Lata speaks to Siva Ramakrishnan of Gokuldas Exports and the FIO Director General Ajay Sahai on the weaker rupee, tariffs and India's exports.
You want to talk business? Meet me in the On-Board Lounge.
India's mutual fund industry is witnessing a powerful transformation. Retail investors are stepping in with confidence, changing the way India invests and builds wealth. In the Season 3 premiere, catch Amphi Chairman Sandeep Sikka and Chief Executive Venkat N. Chalasani in conversation with Surabhi Upadhyay. Mutual Fund Sahi Hai presents Nivesh Ka Sahi Kadam in association with News 18 Network. At these times, only on CNBC-TV18.
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
मनी 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 एवरी मंथ।
सोच बदलो और बैंक भी।
ये हथेलियां बड़े वादे कर जाती हैं, मासूमियत से चुप पकड़े कान तो माफी पक्की समझो। जिंदगी भर साथ निभाने की कसम एक छोटी सी चुटकी।
जिंदगी के हर मोड़ पर आपका साथ देने का हम आपसे वादा करते हैं। एजेस फेडरल लाइफ इंश्योरेंस, हर वादा मुमकिन।
क्रीम या ब्लू? क्रीम।
लंबाई 50, छाती 36, तीरा 20, 2 जेब फ्लेम वाली।
कटिंग।
गाड़ी सिलाई, कॉलर, डन।
Navi UPI, the UPI app for people in a hurry.
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
सपने सब देखते हैं पर कुछ बावरे होते हैं। सपने जो अपने हुनर से किसी के चेहरे पे मुस्कान लौटाते हैं। ऐसे ही अतरंगी सतरंगी सपनों के साथ जुड़ा है कोटक, ताकि आप हर चुनौती का सामना कर सकें और दुनिया को कह दिखाएं, हौसला है तो हो जाएगा।
Welcome to It's the Economy. The November trade data showed a 19% jump in exports year on year and a near 11% jump even month on month, that is November over October. Separately, the rupee has depreciated 2.5% in the past month and 6% this year. Has this made life easier for exporters? Can our exporters manage to grow despite high US tariffs, because exports to the US have also risen very sharply? To discuss these issues, I have with me Mr. Sivaramakrishnan Ganapathy, the Vice Chairman and Managing Director of Gokuldas Exports, and Dr. Ajay Sahai, Director General of the FIO, that is the Federation of Indian Exporters Organizations. Gentlemen, thank you very much for your time. Mr. Sivaramakrishnan, to start with you, specifically textile exports were up 8% year on year in the month of November and 8% up month on month as well, November over October. Is generally, not just US, but textile demand reasonable at this time?
Well, textile demand is reasonable, but the fear is not near term, but fear is 2026. The tariff has remained high at 50% from United States, and that's a very large market. If you look at apparel, about 5.3 billion goes into United States out of our 16 billion of exports. So more than a third goes into that particular market. And US continues to remain a single large country which buys. China is another large market, but China makes for China, so it's not really a market for us. and Europe is fragmented. It's growing and a large market, but it's well served from India for now, and it's better served from some of our competing countries which have duty-free access to Europe. So a loss of US market has not really hit the export numbers for now, and one of the reasons is because of the momentum, because of the fact that Indian exporters, particularly in sectors which are hit by the tariff, like apparels, textiles, etc., where we have also shared the tariff burden with our customers. So for now, it's in a holding pattern, but I worry for 2026. And unless the tariff goes away or some resolution is found to the penal tariff of 25%, we may find that the demand going forward may slow down, as today both the brands and the suppliers are bearing the extra cost. And in some ways, you could call it a lose-lose deal. So it should really, it's waiting for a turnaround from that perspective.
Okay, you mean that your principals or your counterparties are ready to share up to a point, but what did you say, mid of next year, they may want to change their mind and look for other suppliers, you say, if the burden of 30% penal tariffs don't go away?
That is correct. So ours is 50%, whereas rest of Asia, which is all our neighboring competing countries, are at 20%. So we have a 30% delta vis-a-vis other competing countries. Remember that electronics manufacturing and some other sectors don't seem to have this issue because they have a tariff exemption. But the sectors which have been impacted with the penal tariff would see some atrophying of business, particularly from United States, as there are other neighboring countries which could be far more competitive.
Okay. Well, that's true, because at the moment, textile itself is doing well year on year and month on month. Dr. Sahai, let me quote the US numbers again to you. India's exports to the US are up 22.6% for November. They are up 10% month on month, November over October. And they are up 11% if you take the full 8 months, April to November, 25 over 24. Textiles we have got a view, but more widespread, other exporters, what are they telling you? Are they able to find rival destinations? How come the exports to the US are so good?
In fact, if you look into the US, roughly 55% of India's exports is impacted by tariff, 45% in either under the exempt category or under Section 230, where we are having a level playing field. In 55% of the exports, as told by the previous speaker, most of the exporters are taking the heavy hit, and they're continuing with the buyer because they feel that if buyer moves to some other geography, even when we have the BTA, probably it may not be possible us to bring back the buyers. But though the disaggregated number for US is not available, we feel that it is largely because of the export of the smartphone, probably which is growing very rapidly. We have to see the other components also. I'm not sure whether in apparel and textile, now we are growing or not growing, because it's not that all exporters are taking the hit and continuing with the business. Those who are supplying to the brands, and probably brands have deep pocket, they have large margins also, and they are managing it. So it will be a mixed picture in the US. Of course, 22% growth is very, very encouraging, but once the disaggregated numbers are available, we will be able to respond it better on that.
Okay, we've got some disaggregated numbers. Electronic goods, not to the US, but generally, overall, electronic goods have grown 39% year on year and 14% month on month for November. So you're right that electronics has perhaps made up for negatives in other areas. But, Dr. Sahai, the overall picture, November exports are up 19% as a whole compared to November of 24, and they are up 11% over October. Even if you took October to November, April to November, those 8 months, the growth year on year is fairly decent, like some 6% in total exports. So is it that generally the other areas are demanding well, or Indian exporters to the US have been able to find rival destinations? Like we hear about marine, the shrimp farms apparently are being bought by China and Japan.
In fact, I will say that at this point of time, I personally feel that this is not an aberration. Probably this is depicting a trend which will continue to show the resilience of the industry. They have diversified into, we have moved into the value-added segment also. In some of the geographies, we are doing it very well. When you are looking into the region, probably in West Asia, Africa, Latin America, and even in ASEAN, we are doing very well. In some of the sectors, we are doing exceptionally well. For example, if you are looking into the engineering sector, it is showing growth because many of the emerging economies are investing in infrastructure, leading to the demand for engineering goods. In some of the engineering sector, particularly in electrical machinery and capital goods, we have become very competitive. If you're looking into the pharma and organic, probably global companies are looking for an alternative supply chain where India is emerging. In petroleum sector, the refining margins have improved and that is showing good result in petroleum exports also. In agri and food sector, rupee has definitely provided some competitiveness. And since the logistics costs have also been softened, this is helping us. Okay. So both in the geographies and in the product, we are doing very well. And that's why we are now firmly assured that probably the US tariff is not going to hit India. We will be able to recover those losses in the rest of the geographies. Though, of course, this will be a medium to long-term strategy, which will help us to move into that direction.
Okay. What's your sense, Mr. Sivaramakrishnan? To what extent can you diversify? Can apparels generally diversify away like the shrimp guys have done?
So diversification is the mantra because, we are living in a super volatile world. So we don't know, even if, let's say, the penal tariff goes away, what stops it from coming back? So it's always good to diversify, and all the companies, should take the diversification strategy, and we are doing too. The only problem is that there are no very large markets like United States and large retailers or large concentration of buyers, which US has. So the diversification itself takes time. And unlike shrimp, etc., where, they could find the China market, for manufactured goods, China is not the destination because China is very good at it. So we will have to find other markets. And, there are not many other large markets like US. So it's not easily replaceable. It takes 2 to 3 years.
Okay. At time permitting, I'll come back to this. But first, I wanted to ask about rupee depreciation, Mr. Sivaramakrishnan. Did that make life easy for you? About 6% this year and 2.5–3% just in a month.
So it's a salve. It's a balm on a deep wound. So it has not cured the wound, but it's soothing a bit.
Okay. Yeah, I know 6% for a 50% tariff and 30% penal. 6 will be only a salve, as you say. What about your thoughts, Dr. Sahai? Do you think this rupee depreciation is a bit of a help for your committee of organizations?
In fact, rupee depreciation is definitely supporting export, but on a selective basis. In the labor-intensive sectors, where we have very less import intensity, like apparel, textiles, footwear, carpet, toys, gems, toys, and sports goods, agriculture products, it is helping us a lot because not only the Indian rupee has depreciated, probably we have depreciated significantly, and some of our competitors' currency has appreciated also. So that margins have definitely come to us. But it is more on margin stabilization rather than triggering volume. So it is not that it is giving us additional business, but we have become competitive. And it is related to the sector. Probably if you are looking into petroleum, gems and jewelry and electronic sector, we may not be that much advantageous position, but of course in the labor-intensive sector, it is providing some relief to the industry.
Yeah, I take your point. Electronics, gems and jewelry are hugely dependent on imports, which they value add and export. But incidentally, gems and jewelry, it's a 28% jump year on year and 27% jump month on month as well. So something's going right, at least in November, for gems and jewelry. But Mr. Sivaramakrishnan, just a final question. What about domestic demand? I mean, we've seen this K-shaped recovery. We've seen an 8% growth in the first half. Will you be able to, diversify to India itself, to some extent at least?
That's clearly a possibility, right? But at the moment, people who are exporting find export markets more lucrative or more meaningful for them because their manufacturing is oriented to a certain quality standards, etc., for exports. So then when we start catering to Indian markets, our realizations drop. And, that's really a second best option from our standpoint. So our hope and aim is that we retain the US and, the rest of the world market. And Indian market then becomes a secondary option as a plan B or plan C, perhaps.
Okay. Last word from you, Mr. Sahai. What is your sense about the overall export scene? If the trade deal is delayed, are we going to see unemployment? Are any of your organizations telling you that they may have to close down or at least become smaller?
In fact, some of the industries will definitely be impacted because it is not possible in every sector you diversify into the domestic market. For example, if you are looking into carpet sector, over 60% of India's carpet export is to the US, and probably that segment may not be able to sell in the domestic market in that large volumes also. So for some industry, definitely it will be very challenging time. But the way India is diversifying, I'm pretty sure that it will not hit the export number.
Okay.
But at the same time, they're also hopeful that maybe by March or before that, we will have US BTA in place. The rest of the things have been taken care, probably a political...
Out of time, sir. Out of time, Dr. Sahai. One sentence from you, Mr. Shivaramakrishnan. When before we see job cuts in textiles, you think? How long can you all hold on?
I think another 3 to 6 months would be the outer limit. And after that, I think it would start seriously impacting the business. I'm hoping that by then some solution, either we diversify or some relief comes in terms of tariff.
Okay, that really is the big takeaway, that by 3 to 6 months, we should get something done. Else, there are job losses possibility. That's a big social cost to pay. Thank you very much, Dr. Sahai and Mr. Shivaramakrishnan, for filling us in on what's going right and what yet needs to go right in the exports, especially on the tariff issue. That's it on this edition of It's the Economy. Thanks for watching. After a break, Chartbusters.
Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, the banker to every Indian, truly. And Bank of Baroda se loan lena ek master stroke hai. In association with Servo Hypersport F5, when speed is your default.
AU करंट अकाउंट के साथ मिलता है फ्री UPI QR ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम। AU
सोच बदलो और बैंक भी।
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड में मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। Century Ply Club Prime. Raho befikar.
KSH International Limited now launches an initial public offer of equity shares of face value of 5 rupees each in the price band of 365 rupees to 384 rupees per equity share. Bid offer opens on Tuesday, December 16, 2025 and closes on Thursday, December 18, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
2026, take notes. Manifesting. For my little Miss Sunshine, tickles and giggles. Also want to be a biker chick this time. And dear 2026, only love for my people and myself. To manifest my best life, nature's cosmic energy.
Now mine, natural diamond intention pendants. Anytime is a good time for multi-asset allocation funds. Invest in a mix of equity, debt, gold and silver through one fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
चलो चलो AI से पूछते हैं. Do fish get thirsty?
If AI will use so much energy, then what is the future of energy?
Infinite clean energy. Avada,
Always clean, always on.
होम EMI 50,000।
आउटगोइंग तो जा रही है। आपकी क्या तैयारी है?
पूरे सीलिंग का 20,000।
आउटगोइंग है जा रही। आपकी क्या तैयारी?
मौसा जी, मेरी शादी का गिफ्ट।
मनी की आउटगोइंग रहेगी जारी, इसीलिए कर लो तैयारी। SIP के साथ इन्वेस्ट करो और जरूरत पड़ने पर SWP के साथ सिस्टमैटिकली विड्रॉ करो। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
This is Network 18 and you're watching CNBC-TV18.
Co-powered by SBI, the banker to every Indian, truly. And Bank of Baroda से लोन लेना एक मास्टर स्ट्रोक है।